think about the application of this new tax law to individuals, I think it's useful to start thinking about it. This really was intended as a tax cut bill. So in general, you're going to see lower tax rates kind of across the board. Now that may not apply to everybody, and you especially see that with the lowering of certain tax rates, but that's not the whole story. I mean, there's a lot more that goes into it than just looking at tax rates and how they change. I mean, I think you need to actually look into what actually might comprise taxable income and how you get there.
Yeah, certainly, because you could compare the actual tax on, say, $50,000 of taxable income under the old rate structure and the new one, and the new one's going to look a lot better. But the question is, will I actually have that same $50,000 of income under the new structure? And the answer is no. It may be higher, it may be lower. It really depends on the details, because from a big picture, you have really three main things happening from a deduction point of view. First, personal exemptions are repealed, so those will no longer be applicable whatsoever. And that was the about 4,000, I think it was actually 4,150 per person. So those go away. The standard deduction also slightly less than doubles. So depending on exactly what your facts are, that those two combined together could be good, it could be bad. It really depends primarily on how many dependents you have and whether those dependents were eligible for a child tax credit or not, which has also been doubled from 1,000 to 2,000. So you put all of those things together, and it's really going to depend on how it all comes together as to whether it's good or bad. But the itemized deductions is where things get a lot more interesting, because itemized deductions have changed pretty substantially. The biggest one being the limit or cap on the state and local tax deduction at $10,000 on a combined basis for all income and property taxes.
And I think that's the one that's gotten the most attention in the public, but there's probably a number of them that have flown a little bit under the radar that may have a lot of impact as well.
Yeah, I think the thing that we see people getting most excited about, aside from state and local, once they get into the details of this, is the miscellaneous itemized deductions. They're not used by everybody, but for the ones that are using them, and that those are the 2% floor types of deductions that people often know them by, it's a big deal because, for example, investment expenses are included in there. And so that becomes a significant difference under the new law. So in general, I think what taxpayers will see is that total itemized deductions that they have, they're likely to go down going forward compared to the law before.
So we're kind of seeing a trade-off where you may have a lower rate. Some of your deductions you took advantage of before may be limited in some ways. Some ways they might be enhanced a little bit. So we have this new qualified business income deduction. If you're an owner of a closely held business, the income flowing through to you might now get an additional deduction. So I think that's another layer that comes into it, that it's not directly an individual item we always think of, it's more of a business, but I think that attribute will flow up to individuals and be a nice benefit.
And so if it's not just kind of clear from the big picture how this new law is going to impact any specific individual, what should individuals really be doing in response to this at this point?
I think right now it's the time to sort of evaluate how this is going to apply to you. There's a number of ways you can model this out and start to see what the impact is going to be, and at least get a tentative idea of what your taxable liability is going to be for 2018. I think for some things, as you're filing your 2017 tax returns, make sure you're taking advantage of all the deductions that could be on there. Going forward with 2018, I think throughout the rest of the year, it's time to start thinking about, will I fall into a standard deduction at this point? And maybe some of those itemized deductions don't make as much sense anymore. You may change your behavior. In other cases, you may not. I mean, you may still want to do something.
Yeah, I think it's projected at this point that more than 90% of taxpayers will take the standard deduction. And that'll make things interesting, because I think a lot of taxpayers have just a mindset of, charitable contributions are good, mortgage interest and property taxes are good. But if they're taking the standard deduction from here on out, those things really aren't providing any benefit to them whatsoever. And that can really just change the way people individually kind of think about their personal financial situation and kind of how they react on a go-forward basis. And that's certainly going to take some time to get used to.